Ben Brayshaw and Seth Krussman of Brayshaw Financial are here with us on KKPZ 1330 The Truth. Obviously, we all have concerns over the market in the midst of the COVID-19 virus. They're going to address a lot of the questions you may be asking to help guide us through these difficult times.
So, Seth, with the coronavirus kind of in full speed here in the United States, and investors are concerned about their portfolios, what are you doing right now with someone who says, "Hey, I've substantiated a large loss or realized a large loss in my portfolio, and I'm not sure what to do"?
Yeah, that is a tough question. We are seeing the numbers start to just ramp up. I think yesterday was somewhere around 60,000, and it's around 10,000 cases a day that are just starting to pick up and move through the population without really knowing where's the end in sight and how the fallout or what's going to happen next. So one of the things that's really good here is that we are seeing an increase in the cases. Believe it or not, that's what everybody wants to happen, because the sooner that happens, the faster you get to that place, kind of that tipping point where we can see the actions that we've been taking and how quickly those are going to react as far as the population and the attempt to try to get our arms around this is working. In terms of the portfolios and how are people interacting and what are we trying to do and trying to help our clients engage around their portfolios, this really depends on each individual. Where are you at right now in your accumulation? What is your plan for retirement? How are you allocated? And frankly, some people have been so risk averse even coming into this. This is creating the opportunity for them to start to look at some really good look at the market.
So, Seth, something I would add too is just, I had a guy who contacted me about his portfolio with another advisor, concerned about different things, and we've been making some very strategic moves. Seth and I have, I think ultimately there's a lot of pace in the market that's opportunistic, no matter how your risk is. Like, for instance, we made some changes from, some maybe corporate bonds to some muni bond spaces because the muni bonds were oversold, and we think that the value had been pushed down further than it needed to be. So we've made changes that way. We've helped people kind of reallocate their portfolio who need some conservative holdings to look at that. We've also looked at things like the Russell 2000. We've made some changes there. We looked at the NASDAQ. We've looked at semiconductors out in China. We've made some really very strategic moves that can potentially allow someone's portfolio to just kind of have a little bit of a faster ride in the market space. May not be relevant for everybody. Some of these are high risk potential moves, but I mean, some people are contacting us and we're doing straight up equities who have risk tolerances that way. Some people are looking at everything from technology to the airlines. I mean, we even have people putting money in cruise ships. These things are huge high risk ventures, and I wouldn't recommend these for people in general, but the activity and opportunity in the market is really found, I think, in the blue chip high dividend space, which we talk about regularly on the show. And these are areas where they are so undervalued, in my opinion, in some spaces where you can get dividend yields that are significantly higher than what you might have gotten even just a few months ago, and really play out a long-term issue.
Good questions here coming across our desks are, what should I do now? Should I stay invested?
That's a great question. I think ultimately, if you're in the market, you're in the market. I think how you're invested, again, is really what's important. So this is where, it's hard to sell an asset that's underwater and positioned to another asset. And most of the time, I would say that that's usually not a good move. But if you're working with a professional who says, hey, listen, take this loss, but let's reallocate here because we believe in a much better movement forward, like we do with our managed portfolios, we look at the market, we make an analysis, and we pivot to avoid that, which has helped our portfolios in a lot of different ways. And that's just something that's just good technical management. Problem is the average investor can't do that. What kind of indicators should we look at or look for about the market and things surrounding the coronavirus that would either say, hey, watch out, buyer beware, or I got to get all in because things are going to look good?
That is the question in terms of timing the market. Everybody wants to know, what do I do? Do I get in? Do I hold off? Do I step back? And I think having a principled approach really to what it is that you're doing. Okay, Ben, you talked about if you're in the market, you're in the market. Absolutely. If you're in that 401k right now and you have the target date fund that you've been allocating into and putting into, do you continue to put more money in? Yeah, you do. Right now, especially if you have a time horizon out there that is allowing you to do that because you're getting the buying opportunity that you need. And we may not see this opportunity for who knows how long, but how deep does it go? We don't know. Where we're sitting at now, maybe we've found a little bit of support. It looks like that because we've got the stimulus packages coming through. Does the Fed have more liquidity to go? Yes, they do have more bells and whistles that they can pull, more levers, right? And we've heard so many people screaming, oh, they're all done. That's all they have. That's not true. They have more things that they can do in the background to try to help. And they've shown that they will do that. Do we have another 20% that we can pull back? I would say, yeah, probably. We have that kind of room to pull back more. Are you thinking you want to start getting into the market presently? I would say, yeah, this is probably a good time to start thinking about or taking some of those steps towards participating, because we do know off of the high, we're down 30% or so, right? And we're seeing more news come through daily to take positions in your portfolio and ultimately to try to find some alpha or some gains in this whole process.
Seth, I would even say too, like one of the things that I've just chatted, and I know I haven't even mentioned this to you, but I was talking to a client the other day, and he said to me, he goes, where do you think the lows are? I had told him, I thought 18,000 on the Dow, 2,200 on the S&P. I ironically have been extremely close to those numbers. I actually put it in writing to him, but I also said, I think that's more of a traditional pullback. I said, there's a couple of things that would set us into a much greater momentum downward. And I felt like a couple of things, if we saw a mutation inside this that caused excessive concern that we were really going to be housebound nationwide, I felt like, hey, we're looking at a 15,000, 16,000 Dow. I also think if they close the stock market for 3 to 5 days, we would have a liquidity fear. And I think mass panic selling would go on. And I think we would see something around the 10,000 Dow, which would be horrific, maybe 9,000. Those are the types of things, buyer beware. If you're in the market, you're long, maybe you're even buying in now. If something tragic like those things happen, that's where I would say, hey, you probably do need to get out.
So one of the things that's happened here, Ben, is we've had a really deep, fast, furious sell-off in the market. I've heard two different places. People go two different ways. They say this is a good thing, and that they don't know. Those seem to be the consensus there. What are your thoughts around having such a fast sell-off in this market?
Well, that's a great question. Fast sell-offs are always scary, right? And no one ever wants to buy when the market's down. And as Buffett always says, you make money when everyone else is in fear. And that's the kind of environment I think we're in. We are in fear, but I think there's a really quick turnaround inside the marketplace in the standpoint of we kind of have a good, strong idea what we're dealing with because China's already lived through it. Most of the factories are back to work. The pollution levels, which is how we gauge China's workforce, are back to normal, unfortunately. And, so we have an idea of the time horizon on this, how it's going to affect our economy and how we live, how do people get out of that fear stage? Those are concerns. I don't think we have a V-shaped recovery here. I think we have a U-shaped recovery, Seth. And how long that bottom of that U is, I'm thinking it's six months. I'm thinking we see a really strong fourth quarter, great first quarter of 2021. I think we see some real strength coming back in a lot of equities. That's kind of how I'm envisioning this right now. But I think it has a lot to do. People are going to get out of this quarantine and this self-quarantine thing and say, I want to go out to dinner. I'm tired of being alone. I don't want to look at anyone on a computer screen again.
So what we're in right now, or what we're looking at, is we are looking at an exogenic or an outside source coming into the economy and affecting the economy the way it has. And we've never seen anything quite like this, where everybody has now either chosen to or been asked to stay home. So that has a significant effect on what is going on throughout our economy, and that is from the outside. Now, in a 2008 or a 1929, those were balance sheet recessions, right? Those were significant problems in the economy that were pushing through and having the effect that they had. We've seen, a lot of boom bust recessions, okay? And then there's also the supply side shock recession, which is just like a 1970s version due to the higher oil prices. We have seen much lower oil prices, so we've kind of got that happening in the background, and that's part of what's moving through. But for the most part, it really is this COVID shock of everybody staying home. So what we have seen across the board is that these types of recessions move through the economy much more quickly. Okay, on average, we're looking at around a 6-month period of time, and maybe that isn't as sharp as a V, but in terms of the types of recessions that we typically go through in our economy, this is one that we look to hopefully recover from much more quickly. And so what is going to lead us out? We've talked about all sorts of different plays and ways that we can be positioning our portfolios. We like the technology side. We think that those are big places. There is that oil and gas opportunity that we've looked at as well. Those might be a longer term retracement. Why? Because you're going to have Saudi Arabia needing oil and gas ultimately at around $50 a barrel to be able to support their state. And that's the levels that they need to see. So they can't hold out as long as Russia can in these levels. So there's some of those other pieces that we see behind moving through and wanting to push this economy back into a much healthier level that we were seeing in the 2020, 2019 moving in. Ben, I'd like you to talk about fear, what the role fear is playing right now, the reality of it, and what can we do to keep ourselves on track?
Well, that's always the easy question. I think fear is something that we're not supposed to even engage. It's hard for us. It's hard for everyone to not entertain it. But fear is real. It may not be justified, but it is real. It is something we do feel. And I think with this marketplace and what's going on in COVID and all the different things, like there's a lot of concerns. The truth that we have is that no matter what the death toll is, we don't have everyone tested. People are really dying, but ultimately this may not be to the extent or the overwhelming, wipeout of, 50 million Americans that was probably, originally feared. This quarantine, this self-closure thing was extremely well called. Definitely something we needed to do on some level. It's going to slow this down enough to probably help our hospitals, really help the majority of the people who are really impacted by this. And I'm really proud of what's going on in the political arena on some level that we're taking this. I'm really proud of the Americans that are coming together and doing this both voluntarily, and the companies that are doing this. This is what we need to be. This is what proves we're Americans. I was telling my wife how much I really appreciated this event in our kids' lives as we are able to teach them the value of things. I watch my children waste cereal, and it bothers me growing up on a farm, and able to talk to them about not wasting this, because you know what, we may have to be here for 2 to 4 weeks, and we don't know if there's going to be toilet paper on the shelves, and there may just not be any milk to get. Our kids will remember this forever, something we've never gone through.
We may have remembered the run on the gas in the 1970s, but they're going to remember the run on the toilet paper.
Yeah, they are going to run on the toilet paper. And I think this is a good experience in some level. We need to learn from everything. But right now, the market is not telling me to be afraid. Right now, the market's telling me to be a buyer. And we are actively doing that. We have had an exorbitant amount of money coming in the door from clients, even new clients just looking for more in-tune help. And, I'm really excited about what's coming up, Seth. In next week in our show, we're going to have Sean O'Hara with Pacer, who's a tactical manager, somebody we use in our show, which is going to be great. If you don't know what tactical is, you don't know who Pacer is, it's somebody you want to get your hands on. They're the 19th largest ETF, I believe, firm in the world, and they did that in, I think it's like 4 or 5 years that they've accomplished that growth, which is just astronomical. It's all organic. So that's how I think about fear, Seth.
Perspective is everything right now. Here's the big deal: is you got to be focused on your long-term financial goals. There's lots of things inside of that envelope that we can unpack. We can revisit your risk tolerance. We can take a look at the investment policy, review the liquidity needs that you have. Goals here really should direct you towards diversification. This is an opportunity to rebalance. Consider the tactical shifts that we've been discussing inside of your portfolio. And also there's the bigger part here, the tax planning strategies, where tax loss harvesting is possibly an opportunity this next year, next several years really, or Roth IRA conversions, just a couple of those places that you can take advantage and sit down and make sure that your plan is on track. Beautiful time to do that.
Thanks, Ben and Seth. Ben Brayshaw and Seth Krussman of Brayshaw Financial, their take on the impact of this historical event that obviously has us all concerned. Contact them, let them answer your financial questions. They're happy to do that, and they can help you navigate through your unique financial situation. 855-226-8551 or info@yourmoneyontap.com. And do tune in to their weekly hour-long program, Money on Tap, Thursdays at 5:30 p.m. and Saturdays at 10 a.m., and several other times during the week as well here on KKPZ 1330 The Truth. Let me give you that contact information once again for Brayshaw Financial, 855-226-8551 or info@yourmoneyontap.com. Thanks, Ben and Seth. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group are independent of SagePoint Financial.